Smoke and mirrors the deceptive game. The market is a battlefield, but most retail traders are walking in blindfolded. They think it's about charts and indicators. They think it's about picking the right stocks. They're wrong. It's about psychology. It's about deception. The big players, the market makers, they know the game. They control the board. They manipulate the pieces, and they're playing against you. Don't be fooled by the flashing screens and the endless data. The market is designed to mislead you. They want you to buy high and sell low. They want you to panic. They want you to make emotional decisions, because that's how they win. This is not a game of chance, it's a game of skill. And the house always has the advantage, unless you know how to play their game. Trapped by the charts, the illusion of control. Retail traders cling to charts like lifelines. They see patterns, they see signals, they think they've cracked the code, but the truth is, those charts are a mirage. Market makers know you're watching. They know what you're looking for, so they create the illusion of opportunity. They paint the picture they want you to see. They push the price up, just enough to trigger your buy orders. Then they slam it down, trapping you in a losing trade. Your stop-loss orders? They know where they are, and they're coming for them. Don't be fooled by the illusion of control. The charts are a weapon, and the market makers are wielding them against you. Predators at work unveiling market makers' tactics. Market makers are predators. They're sharks circling a school of fish. And those fish, they're the retail traders. They're looking for easy profits. Market makers use sophisticated algorithms and high-frequency trading to manipulate the market. They can move the price in any direction they want, and they do it with precision. They hunt for your stop-loss orders. They drive the price down to trigger your sell orders. Then they buy your shares at a discount. And the cycle repeats. They create artificial volatility. They spread fear and uncertainty. They want you to make mistakes, because your mistakes are their profits. Liquidity grabs, snatching profits from the unsuspecting. Imagine a flash crash. The market plummets in seconds. Panic sets in. Retail traders dump their shares, desperate to get out. But then, just as quickly as it fell, the price rebounds. What just happened? A liquidity grab. Market makers engineered that crash. They forced you to sell at the bottom. They vacuumed up all the cheap shares, and they profited from your panic. Liquidity grabs happen all the time, on all time frames. They're sudden, sharp moves designed to trigger stop-loss orders and force liquidations. They're how market makers profit from volatility, and they're counting on you to fall for it. Section 5. Fake breakouts, luring retail into the abyss. You see it on the charts. A breakout. The price is surging higher. This is it, you think. This is your chance to make a killing. You buy in, excited for the ride up. But then it happens. The rug is pulled out from under you. The price reverses violently, crashing back down below the breakout point. You're trapped. You're losing money. And you don't understand why. It was a fake breakout. Market makers engineered it. They lured you in with the promise of profits. They wanted you to buy high. And they're selling to you all the way down. Section 6. Turning the tables. Thinking like an institutional trader. It's not all doom and gloom. You can beat the market makers at their own game, but it takes a shift in mindset. You need to stop thinking like a retail trader and start thinking like an institution. Institutions don't chase breakouts, they don't rely on technical indicators, they understand market dynamics, they identify institutional order flow, and they exploit market maker moves. They know that the market is a game of manipulation, and they've mastered the art of turning that manipulation to their advantage. Section 7, Step 1. Mastering market dynamics. Forget the noise, forget the hype. To beat the market makers, you need to understand the fundamentals. You need to know how supply and demand drive price. You need to identify support and resistance levels. Don't get lost in the complexities of technical indicators. Focus on the basics. Where is the real money flowing? What are the key levels to watch? Learn to read the order book. Understand market depth. This is where you'll find the clues to the market maker's next move. Section 8, Step 2, Identifying institutional footprints. Institutions leave footprints. They can't hide their massive orders. You need to learn to spot them. Look for unusual volume spikes. Identify large block trades. These are signs of institutional activity. Pay attention to the news. What are the big players saying? What are they doing? Their actions speak louder than words. By tracking institutional footprints, you can anticipate market moves. You can get in before the big moves happen, and you can ride the wave of institutional money. Section 9. Step 3. Exploiting market maker moves. Market makers are creatures of habit. They use the same tactics over and over again. Once you learn to recognize their moves, you can exploit them. Don't be afraid to fade the crowd. When everyone is buying, that's often the time to sell. When everyone is panicking, that's often the time to buy. Use their tactics against them. Set your buy orders below the market. Set your sell orders above the market. Take advantage of their need for liquidity. The market is a rigged game, but with the right knowledge and the right mindset, you can level the playing field. You can take control of your trading, and you can beat the market makers at their own game.